Coming up on Market to Market, the battle over a controversial oil pipeline heats up, even where crude is king. And water from a smaller conduit transcends barriers in the Middle East, earning its developer the World Food Prize. Those stories and market analysis with Jamey Kohake, next.
Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success. This is the Friday, October 19 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. U.S. consumers loosened their purse strings in September for the third consecutive month. According to the Commerce Department, America's cash registers rang up nearly $413 billion in retail sales last month. That's up about 1% from August, and it's nearly 5.5% more than September of 2011. Separately, the department reports that building permits for new homes also rose 15% last month, in their best showing in more than 4 years. The National Association of Realtors reports sales of previously occupied homes fell 1.7% in September from a 2-year high of 4.8 million units sold in August. The Consumer Price Index rose by 0.6% last month. Higher-priced gasoline was blamed for much of the increase. And crude oil prices fell more than $2 on Friday after TransCanada reaffirmed its plans to restart a portion of the Keystone XL Pipeline. The long-term market impact may be minimal, however, since U.S. supplies currently are plentiful. But the plan to build a 1,700-mile pipeline to funnel oil from Canada to Gulf Coast refineries is controversial nonetheless. And this week, the merits of the project were debated from New York to Texas.
We're going to bring that pipeline in from Canada. How in the world the president said no to that pipeline, I will never know. This is about bringing good jobs back for the middle class of America.
And with respect to this pipeline that Governor Romney keeps on talking about, we've built enough pipeline to wrap around the entire earth once. So I'm all for pipelines. I'm all for oil production. What I'm not.
Despite campaign rhetoric, pipelines are being built, albeit reluctantly in some places. Even in Texas, battles are brewing over the Keystone XL Pipeline. TransCanada, the company proposing the controversial project, wants to pump oil from north of the border to refineries on the Gulf Coast. But landowners like Julie Trigg Crawford want to prevent their acres being taken for the pipeline, and they're challenging the condemnation of their property in court in an attempt to slow the project.
We've fought wars over it. We've stood our ground at the Alamo for it. There's a lot of reasons that Texans are very proud of their land, and proud when you own land that you are the master of that land and you control that land.
Crawford's family has denied previous attempts to annex their property, but those projects didn't cite Texas law to seize land in the public's interest. TransCanada is attempting to buy the Crawford's property and that of 100 other Texas landowners, and the company says rerouting is problematic.
Once that starts happening, where does it stop? There are strong environmental reasons to make your impact on the ground as small as possible.
Here's a money grant for $10.
Some landowners are sending Crawford money to help build a legal defense fund.
This is not about the money. This is not about money. This is about the right of a landowner to control what happens on their land for something that appears to be for someone else's private gain.
Earlier this year, President Obama denied TransCanada's request to have the pipeline enter the U.S. from Canada, but the company did not expect resistance in the Lone Star State.
Anyone who attempts to build a linear infrastructure project is, wherever it is, Texas, doesn't matter, is facing increased opposition.
The problem for some, Crawford included, is the peaceful existence between oil and ranching has been broken by money and might.
Those two communities can coexist at times when there's a collaborative environment, I think, between the two, but it's when one of those two pulls out a club of some kind of strength and beats the other one over the head, and that's what's happening right now.
As we produce this episode of Market to Market, we note that former U.S. Senator George McGovern is surrounded by family members this week as he nears the end of his life. McGovern lost to Richard Nixon in a historic landslide in 1972. But the South Dakota Democrat served nearly 25 years in Congress, where he helped develop numerous food and farm policies. In 2008, he and Republican Senator Robert Dole of Kansas were awarded the World Food Prize for their commitment to enhancing the nutrition of millions of the world's poorest children. Often referred to as the agricultural equivalent of the Nobel Peace Prize, the World Food Prize was awarded again this week in Des Moines, Iowa. And like McGovern and Dole, this year's winner also broke through political barriers to fight the war on hunger. Paul Yeager explains.
Over the last 5 decades, the population of the world has doubled, and experts predict it will double again by the turn of the century. It's projected that in order to keep up with the growth, 100% more food will have to be produced in 50 years than is produced today. The ability to meet the nutritional needs for a growing population will continue to rely heavily, as it has in the past, on technological advances in agriculture.
This is a system of drip irrigation. So you see the line, and there are drippers here. From these little holes, water flows into the soil 1 drop at a time, drop by drop. And you can see that the trees...
Dr. Daniel Hillel's pioneering work in micro-irrigation has revolutionized food production in arid regions. The technique makes irrigation much more efficient and increases crop yields. He is credited with transforming what was once a desert into an oasis in the Middle East and around the world.
It used to be that the mode of irrigation, which began in the Middle East, was diverting water from rivers, flooding the land, and then growing crops on saturated soil. That was an advance in civilization, of course, at the time, and it provided for an expanded production base, an expanded population.
The process, however, wastes a precious commodity, water. Eventually, it also causes soils to become waterlogged and saturated with salt, making the land unsuitable for crop production.
So waterlogging and salinization is a scourge in the Middle East, and not only in the Middle East, but in many river valleys that are subject to this old method of mismanagement. The soil is moist, kept moist by the frequent sprinkling. This high-frequency, low-volume irrigation that keeps the soil constantly moist, never saturated, never dry, optimally moist. And this encourages the maximum growth and fruiting of the trees.
According to the United Nations, 12.5% of the global population, or 1 in 8 people, do not get enough to eat. Because Hillel's work in micro-irrigation plays an important role in the war on hunger, he is the latest recipient of the World Food Prize. The World Food Prize is the foremost international award in the field of agriculture, and it recognizes the achievements of individuals whose work has improved the quality, quantity, or availability of food.
My joy at receiving this award is tempered by the realization that the work it recognizes is far from complete. Despite all obstacles, there are already hopeful signs of progress. We must build upon and enhance these beginnings in the interest of ensuring long-term harmony of the community of life in our one and only planet.
The technique of micro-irrigation that Hillel developed in Israel is credited with turning barren deserts into productive agricultural land in over 30 countries, including Arab nations throughout the Middle East. His work transcends long-standing political and cultural barriers. Hillel demonstrates dramatically what is possible for one person to accomplish when differences are put aside for the sake of the greater good.
Well, the Midwest is the breadbasket for the United States of America, for North America, and it is in many ways the breadbasket of the world. It is helping to feed the world. And yet there is room for improvement. And we must be concerned over resources, the proper use of resources, the sustainable use of resources. We share the atmosphere, we share the ocean, we share water resources, we share the future of the world.
For over 40 years, Dr. Hillel has sounded the alarm that climate change could reduce the amount of rainfall in already dry environments, warning of possible food shortages while developing innovations that help to feed a growing population.
The culminating message is that we have misnamed our species. We call ourselves Homo sapiens sapiens, which means wise, wise man. That's too self-flattering. I suggest we change the name of our species to Homo sapiens curans, which in Latin means caring. Wise man that is caring.
Next, the Market to Market Report.
With the fall harvest nearing its final stages this week, grain markets moved modestly higher. For the week, December wheat gained 16 cents, while the nearby corn contract moved 11 cents higher. Soybeans also rallied this week as the November contract settled with a weekly gain of 12 cents, while nearby meal prices declined by $1.40 per ton. In the softs, cotton had a big week as the December contract gained $5.50. In the dairy market, November Class 3 milk futures lost 43 cents, while the deferred contract moved 22 cents lower. Over in livestock, December cattle gained $1.77, nearby feeders rallied more than $4, and the December lean hog contract moved $1.82 higher. In the financials, the euro gained 65 basis points against the dollar, crude oil lost $1.80 per barrel, COMEX gold declined by $37 per ounce, and the Goldman Sachs Commodity Index lost nearly 10 points to settle at 655.90. Here now to lend us his insight on these and other trends is one of our regular market analysts, Jamey Kohake. Jamey, welcome back.
Thanks, Mike.
It was kind of a disappointing day on Wall Street on Friday. What brought that on?
A lot of macro news again. We thought we might have separated ourselves from that here the last few months. Not a lot of talk about the pigs anymore. Portugal, Italy, Ireland, Greece, and Spain. But Greece and Spain have both crept back up in the news again and just made a lot of the big fund managers nervous. Spain needs a bailout. That's still floating around, and just a lot of nervousness out there. Plus, it was the anniversary of the '87 crash. So just saw some guys just get me out pretty much.
Just market emotions, basically, at play there. All right, let's talk wheat. How are things looking in the wheat market?
Domestically, we're dry, obviously. The key here with wheat was last night. The news Thursday night really supported the market hard early Friday morning and about half the day through Friday. Ukraine looks like they're going to put a ban on exports sometime mid-November. And that would shift a lot of demand to us from the Baltic Sea area. And that's what we really need to jumpstart this wheat market again. I think if this does pan out, you're going to see the wheat punch through $9 again very, very easily. But it's going to be all off the export business right now.
And the Ukrainian export ban, does that have a timeline attached to it?
Mid-November is the talk right now, November 11th time period, but it'll be confirmed again. But that'll be the key, is the exports shifting back to us. Australia was dry. They've got some decent moisture. They're back looking okay. But the big wild card is the exports. And I think right now I'm looking for the wheat to get through $9 again.
So advice to producers, hold on to what you got, see where things go?
Right. I'm not doing hedging right now at all in the wheat complex. I would hold off and see what happens in here closer to the end of the year.
All right. In the corn market, we had a bit of a bounce this week. Where do you think it's going? What's going on with corn?
I think corn is more range-bound than anything else. It's similar to wheat following corn, corn following wheat right now. Exports aren't nothing spectacular at all. I think the Christmas contract is stuck between about 730 and 770 right now, same as the March. End users need to be buying 730 March wheat for a long hedge. Basis, I think, will be the key here with corn. I think the strong basis levels will support the futures all the way out into spring, early summer, and that will pull the futures price higher. But right now, for the next couple of weeks, I think 730, 770, solid rallies, buy the breaks until we get some more fresh news off of exports or something happens in the bean market.
Now, with regard to the situation in Europe, is that going to have any effect on ongoing grain prices at all, corn in particular?
We've seen a little bit of that in the last roughly 2 weeks in the whole entire grain complex. Like the equities we're talking about, we've seen a lot of that macro European news creep over into the grain complex with a lot of fund liquidation, especially the beans. Beans have broke $3 roughly since Labor Day. We've seen that macro selling in all markets. We've also seen a lot of margin calls selling and a lot of fund liquidation too off of Dodd-Frank. That new bill, part of it has gone into effect. There's some new regulations out, and some of the funds have had to cut back on their size.
All right. So advice to producers again, wait for...
Right. I think higher prices are coming down the road for corn. I think it's closer to in the year after the end of the year where we could get back to acceptable prices that everybody is looking for, like $8. I think right now we're range bound. Even the red Ds I'm holding off of, the Ds 13, where a lot of talk has came from, we're trading 620s here late this week. I think at least 650, 660 before you start to even look at laying any more grain off for the Ds 13.
All right. Let's talk soybeans. The bean market, we mentioned a little bit. We're seeing some of those macro effects being bearish on prices. Do you see kind of a similar trend for corn, or is the export market still looking good for beans?
Export market is still looking good for beans. They were a little more stagnant this week. The weekly number was just pretty much average, but beans are going to be the leader of the whole entire grain complex all the way, I think, till summer pretty much. And we need to see what type of crop South America has before I think beans, break lower and hold lower. The trade this week was wanting to buy beans at $14.75 hard. That was an open chart gap area that would have been filled. Never hit there, rallied hard on Thursday and kind of left everybody back behind. $15.70 is where I would take profits if you are long. I think we're just going to be range bound here as well. We're waiting on fresh news from China, again on some exports. The rumors out late week. But to here right now, 15.70 is your top side, that's Jan, and your bottom side, 15.20. I would play those ranges. Global balance sheets are very, very tight, so I don't see beans breaking, $15 and holding down there, for a very, very long period. Based off the global tightness, the trade to be in with beans here is to buy the March and sell the red November, Nov 13. And I think that'll be the trade through winter with the beans.
All right. Now, with regard to the beans, as you're looking to sell, as we're looking through December, January, February, how is the South American crop looking so far?
They were bone dry as of pretty much 2 weeks ago. They were right on the borderline of pretty much a drought scenario in some of the areas. They've gotten a lot of moisture down south, southern Brazil, and they're sitting pretty well. The crop did germinate, is germinating right now, so there's really no major issues. But I think the funds want to be proven that there is a crop before they jump out of their lungs in the beans.
So we've got a kind of a window of opportunity here before the news from South America comes in, while we're still working with solid exports to China. Capture the rallies in here, sell.
Yeah, you're exactly right, and I think that'll be that way till early spring, where we're, being the market's supported on breaks, buy the breaks, and we're just waiting on to see what globally happens with the bean market.
All right, well, let's talk cotton. There was a big move in cotton today. What happened there? What's driving that? It's
been a wild week in cotton. A lot of quality issues with harvest supporting the market. A lot of the crop has not been ginned yet. That's supporting the market. I think cotton has more upside. I'm looking for Ds to go up around 83. I would buy the breaks right now until we get more of some quantifiable information of how bad or how short the crop is. It's just the crop has not been ginned and there's quality issues.
So this is just market uncertainty out there is playing out in the prices.
Exactly, and cotton's a wild market. No mercy market. Either you're right big time or you're wrong big time, and I think there's more upside yet to come.
All right, so hold.
Yeah, hold longs, buy breaks. If you get a 2-cent break, I buy into it and look for rally up towards 83.
All right. And now, as far as global demand of cotton goes, we've talked about that in a lot of recent weeks, stagnant, slowly dropping. These high prices going to have any impact on that as we look towards next year?
I think they will. If we would go back plus 100 where we were 2 years ago. I don't think up here in the 80s will make a whole lot of difference. Globally, you're talking about global demand there with cotton. We did see GDP numbers from China this week, 7.4. That's 7 quarters in a row of lower GDP numbers. Everybody would say, well, that's obviously bearish. It surprisingly wasn't. It's actually proven now China may be stabilizing and could be looking for a better economy here short term, which could increase demand. We'll have to wait and see if that pans out.
All right. Well, let's move over to livestock a little bit. It's been a kind of a strong week for livestock. What do you see for feeder cattle?
I see a topping action. We've got about a $6 window that we're playing with right now. I like selling GM feeders right in here where we're at, putting a stop up over 152. You close over 152, you get out. This whole cattle complex, feeders, live cattle, is all supply side. It's all placements. We had a cattle and feed report out today. It was, to me, not a big surprise. It showed that the placement number is bullish, but it was right in the range that was expected. So I think it'll be supportive come Monday morning, but I think the feeders are toppy, and I like shorting Jan and putting a stop close about 152.
All right. And live cattle, same advice?
Same advice there. It's all the placement number, bullishness there. Longer term, I think there's still more upside in live cattle, but they're starting to trend towards overbought. I would look for a pullback in the December contract back to about 126.5 and look to get long there.
All right. Now, we mentioned the news out of Europe, slowing economy in China, perhaps. As far as demand goes domestically, what do you see for live cattle?
I see demand staying strong. World population is growing, especially over in the Asian countries, Malaysia especially. I don't see demand backing off a whole lot. I could see it here domestically a little bit that we've seen just when fuel prices get high, meat prices get high, but it's not a long-term situation right now where I would be throwing all my hedges on all of a sudden.
All right. Let's talk hogs a little bit. Where do you see the hog market going?
Toppy there as well. It's been on a nice rally, a really sexy chart if you look at it. $9 rally for December hogs, and I think they're toppy. I like to get short D's up in here around 80. Stop close 80.80. That's where I'd be out of. Went back above it, but the cash market has been on a tear. Loins and just the whole entire cutout complex. And this week signaled to me that we're seeing a little bit of a slowdown there. So I think we're setting up for some profit taking. I don't think we're going back down to 69 in D's or 72. I think just a 76 to 77 cent pullback could be about a 3 cent pullback just on profit taking and start back over there. But just a little bit overdone right now.
All right, and you see that taking place in the next week to 2 weeks possibly?
Yeah, I do. Yeah, I'd like to get short up in here over 80 and just get a tight stop on it.
And then longer term, what do you see going forward there?
Longer terms depend on grain prices. Are we going to see plus $8 corn again this summer or not? We've seen the June hog contract trade around 100 off and on the last couple of weeks. I have sold some there around 100 and going to trade it in and out a few times. But it's all the wild card X factor is corn. Is
corn prices. Mm-hmm. You bet. Now, with regard to corn prices, how far do they have to drop, do you think, before we stop seeing whatever liquidation we've been seeing in the livestock markets?
I think you probably have to see, the cash price get back down in the sixes, that area. I don't think everybody's going to jump right back in. I'm out for 2 months now. I'm back in 100%. So I think it's going to take maybe a full crop season to be able to, to prove to guys to be able to go to the bank and say, hey, I want back in.
All right. So we're looking at fairly long term there.
I think it's at least till next fall. Yeah.
All right. One thing that's been in the news a lot recently, and I'd like to get your opinion on how the market's reacting to it, is the upcoming fiscal cliff at the end of the year. Is the market trading that news? How is it adapting to that?
It really hasn't traded that news at all. I think it will be here Thanksgiving time period, post-election, obviously, through New Year's. And I think what it could do is spur some liquidation. Fund money will come out. The market will get scared. The wild card will be the dollar index. Are we going to go back above 80, 82? And that's bearish for raw commodities or not. The bond market's going to be wild too with the interest rates. Do we get downgraded again maybe? I mean, who knows? There are so many factors out there that I think could spur some downward pressure. Short term, everybody's kind of bullish equity-wise. Stay long stocks to the election, assuming there might be an upset or not. Either way, it looks to be bullish for the stock guys. But come after that, I think you're going to see some profit taking.
All right, and you mentioned the election, bullish for stock guys. Does the election have an effect on the commodities guys?
It does. It's the money flow. It's the money flow with stocks, spilling over into raw commodities. Dollar raised higher, raw commodities commodities would sell off. It's all macro money flow. And also, too, if Europe would have another meltdown, watch out. I think it'd just be an excuse for everybody to say, I'm done for the year. I'm taking my money home. I'll start back over after next year.
All right. And you mentioned the dollar index, and we've seen the dollar all over the place, really, in the past 3 months. Where do you see the dollar going based on what we've got so far in the next 3 months through the end of the year?
Right. This week we put in monthly lows. I think you stay short until we get back above 80. And I probably could see that happening up to the election time period and see some money come out. But right now we're back into a downward trend. The euro is back above 130 again. So there's your two trigger points. 130, you stay long above, you stop it at 130. And the same way with the dollar, you stay short till it gets it back above 80. But I think the dollar does stay weak here short term.
And do you think that's going to have any noticeable effect on exports if we keep the dollar weak? Or
not here short term. I think you have to get back down in the mid 70s, 76 or below to see a big uptick in exports based on the currency market. And that's just because there's so many unknowns weather-wise and export-wise with Ukraine, like we talked about, weather in South America. Australia has been dry at times. So I think that's overriding a weak dollar right now.
All right. And something that's been on everybody's mind is crude oil prices. Crazy week there. Where do you see crude oil going?
I think it's range bound. 87 bottom side, 94 top side. Fundamentally, we should be trading probably 70s or 80s. We got the most crude on supply right now since 2010. Really bearish supplies, but it's another macro deal here. Israel and Iran, Turkey and Syria. A lot of unknowns, a lot of uncertainty, just keeping the market edgy. And one little hiccup over the Middle East, supply lines shut down, Strait of Hormuz shut down, you're probably 120. And the market's just staying supported around 90 based off that unknown.
All right. And you see that going real quick for a couple months?
Yeah, until January, 87.94.
All right. Jamey Kohake, thank you so much. That wraps up this edition of Market to Market. But if you'd like more information from Jamey on where these volatile markets just may be headed, visit the Market Plus page at our website. You'll find expanded market analysis, audio podcasts, and streaming video of our program, as well as links to our Twitter feed and Facebook account, all free at the Market to Market website. Be sure to join us next week when we'll examine the efforts to preserve America's agricultural heritage by saving seed. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success.